I typically find that people want to do the process in reverse. This is probably because house hunting is exciting and mortgages are not so much. There's nothing worse than finding your real estate agent, them showing you the house you love, and when you go to your loan officer, you don't qualify for it. As a loan originator, I look at past payment history, which is your credit score, funds for closing, debt to income ratio, and your employment history. That's not so bad, right? No credit score? You're okay. Bad credit? We can work with it. If you've had credit challenges in the past, don't let the words credit score scare you off. We can help advise you on how to get your score where it needs to be to qualify for the home loan. The underwriters want to see that you have stable employment. I mean, you are trying to borrow hundreds of thousands of dollars. We need a 2-year employment history. After verifying your work history, we want to see how much income you have coming in versus how much you have going out. This is your debt to income ratio, or your DTI. Lastly, funds to close. The underwriters might ask for more information once you're further in the home buying process, but we won't know that until much later. Depending on the loan product that we find that best suits your needs, you may have a down payment. For first-time homebuyers, this could be anywhere from 0 to 5% of your purchase price. When purchasing a home, there's also costs that have to be paid at the time of closing. Later, we'll discuss how to negotiate to see if the seller will help reduce some of those fees. When seeing what you can afford, we want to start with your debt to income ratio, or your DTI. This is your pre-tax income divided by your debts that are on your credit report, plus any child support, alimony, or work dues. Think union dues. We need to have your debt to income be under 50% in most cases. Keep in mind that you need to focus more on how much you can actually pay and afford, not just the amount I could qualify you for. Once you know what you can afford, you need to make sure you have enough cash on hand for those days when things don't go quite right.